Wall Street gains momentum as the US and Iran gear up for second round of talks in Islamabad, and global cues lend support. Broad indices see a slight outperformance with a strong show from the real estate and banking space. All sectoral indices are advancing in trade today.
Vedanta sets demerger record date as the 1st of May with 29th of April as the last day to be eligible. The restructuring aims to create separate sector-focused entities, reduce debt and sharpen the capital allocation.
PNB Housing soars after a strong Q4 marked by profit growth, improving asset quality and record disbursements. Meanwhile, Bank of Maharashtra gains after issuing confident FY27 guidance backed by healthy growth targets.
And SML Isuzu reported revenue growth, but margin pressure weighed on the sentiment with profit growth remaining modest. Meanwhile, the Indosolar posted a sharp jump in the margins and profit despite weak revenues. Both stocks are under pressure.
IT earnings stay in focus with HCL expected to post a mixed Q4 with revenue pressure and margin compression. Meanwhile, Persistent is seen delivering relatively stronger growth with deal momentum and execution, likely supporting another steady quarter.
And Nestle is expected to deliver a steady Q4 with double-digit revenue growth led by volume traction and exports, though the margins may come under pressure from higher input and staff costs.
Hello and welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita Thaplial, and with me is my colleague Ankita Saxena. And next 1 hour is going to be all about your stock-specific question. That's right, the only show where we help you connect with our experts and ask all your stock-specific questions. So just before we begin, let's flash our WhatsApp number on the screen, which is the number where you can send across your questions, 865-797-4571. Write down the name of the stock, the price at which you bought it, and the timeline till which you want to hold the counter. We will get you a technical as well as fundamental recommendation advice from our experts live on the show. So let's move on. We'll also connect you with our experts. But then just before that, the market is well above 24,500 on the Nifty. Nifty Bank definitely performing better as compared to Nifty, almost up 1.5%. We can also look at the broader market doing well, which is the mid cap 100 and small cap 100. Small cap 100 definitely taking the spotlight by performing close to 2%. And we can also see mid caps performing well, close to 1%. But sectorally, we are also looking at PSU almost 1% up in today's trade. But FMCG is also doing good today, but reality being the champion in all these sectors, close to 3% up move in today's trade, and PSU banking definitely posting a good number. Even the defense is up almost 1.5%. So let's also look at some stock-specific action in this particular hour. You know, stock buzzings on results and positive management commentary. We are looking at Bank of Maharashtra and PNB up almost 7%. We are looking at Bank of Maharashtra up almost 2.5%. You know, gainers like Shriram Finance, Adani Ports and Axis Bank. In terms of losers, a slight pressure that we can see right now in Infosys, Ultratech Cement and SBI Life out there in the names. But definitely SML Mahindra, we can see a counter almost down by 4%, and Anthem Biosciences Limited up around 2.5% in today's trade. We can look at SBI Life sliding to almost 3.5% right now, and Anthem Biosciences is almost up close to 3%. All right. So this is the stock specific and the market update, but then let's get connected with our experts on the show. We are joined by Kunal Bothra in the studio and Avinash Kodakshkar joining us. Hi, good morning and welcome to the show, both of you. Kunal, a quick tech check. The market placed well above. The anticipation is quite positive so far.
Yeah, it's been a good day so far for the markets. I think after yesterday's pause for the Nifty and the Bank Nifty, it's a good continuation move today where you're seeing the Nifty back again or climbing above the 24,500 mark. This, I believe, is a very critical breakout for the Nifty, and for the Bank Nifty crossing that 57,000 mark. These are two very important crucial levels for the index over the near term. I would sense that if we just hold on to these two critical points by the close today, then I think the market trend becomes a little bit more better going forward, and then we could be looking at the next set of targets on the upside at 25,000 mark.
All right. Thank you, Kunal, for giving us those levels to watch out for. But without further ado, let's get going with the show and start getting all the questions on board that you have been writing in to us. The first question that's coming in on WhatsApp is from Vijay Kirat, who's writing in from Chennai. He says he's bought 100 shares of Root Mobile at 740 rupees. Please advise. He's not given the holding period, though. 740, he's clearly sitting at a huge loss right now. Kunal, I'll come to you. Let me come to you for this. What should be his strategy? He's sitting at a loss right now. Should he average in? Should he really cut his losses right now? What should be the strategy?
No, I think I would recommend to exit the stock. On say maybe a first phase of a bounce. You are seeing a decent bounce emerging for Root Mobile from 420 levels to now 500 mark. Maybe another 10%, 15% higher from the current juncture, around 550 levels or thereabouts. I think is a good point where you can look to exit, because the stock on the long-term chart still seems to be into a major downtrend. So that's a point which could probably keep you under the struggle over the medium to long term. So I'll suggest an exit on rallies for the stock.
All right, Avinash, a quick take from you as well.
No, I think unless the investor Kavita has got a 2-year time frame, see, because this company operates in the value-added telecom segment, there are few players, other comparable players are Tanla Solutions, and I think the market has been growing quite rapidly. But I think the buying price of the investor has been on the higher side. Unless the investor has a 12 to 18-month view, and I think he remains invested, I don't think in the short term any big bounce can be expected. So unless he can wait for the next 12 to 18 months, I think that would be a hold. But my sense is, I think unless he decides to be a long-term investor, short-term gains are unlikely to happen.
All right. Thanks for that. But let's move on to the next question. This is coming from Osin Reddy, who's writing in from Hyderabad. He says, is this a good time to buy Devyani International? Okay, Kunal, coming to you, Devyani International, is this the right time to enter? Because, if you look at the charts for this counter, I mean, in the last few weeks, at least last 6 months, it has been in a corrective phase, but we do see some momentum coming in the last few weeks, if you will. Is it a good time to enter, or can we wait for more correction?
I think you can start looking to enter the stock at current levels. It's corrected by more than 50% from 220 levels to sub 100 mark. It's trying to recover back from the 100 levels. In the process of the last, I think, 5-6 months, the stock has formed a lower highs and lower low pattern. But then it looks like that the indicators are starting to go into an oversold territory on the weekly monthly chart. So maybe that could be an indication that the stock could be nearing, or at least trying to form a bottom for itself over the medium to long term. I would suggest a contra buy at the current juncture, but the only catch over here is that you need to have a time frame which should be at least 1.5 to 2 years or more.
All right, time frame needs to be almost 1.5 years in Devyani International. That's a take coming in from Kunal. But then I believe we do have a caller from Chennai on the phone line with us, Mr. Kiran. Hi, good morning, sir. Can you hear me?
Yeah, I can hear you well, madam. Good morning to you all.
Hi. Please ask your question.
Yeah. Hi, everyone. So I have been holding Clean Science and Technology 22 shares at the rate of 1,425 rupees. Similarly, IQ also 140 shares at the rate of 317 rupees. Both these stocks are in significant losses right now. Would like your advice. I can hold these stocks for 2 more years from now.
2 more years.
Please share your valuable insight.
Sure. Avinash, you would like to go?
Yeah, I think, IQ Lighting is a very well-established company. And I think, obviously, the business is growing quite rapidly. I think within the lighting space, they do hold a respectable market share. So I think this company looks quite promising if you can hold on for the next 12 to 15 months. The other company, Kavita, which was the other company?
IQ.
No,
IQ Lighting
Lighting
and
I
Clean
mentioned.
Science and Tech. Clean Sciences and Tech.
See, I think Clean Science and Tech, my suggestion is it's better to exit, because ever since the company went public, after the initial euphoria, the stock has not delivered. So my sense is, probably, I think if the investor wants, he can shift to some other sector like capital goods or banking. Within banking, I think Federal Bank or typically a Bank of Maharashtra, these could be good kind of scalable bets in the next 12 to 15 months. So exit from Clean Science and continue to hold IQ Lighting.
All right. Thank you for that, Avinash. We'll move on to the next question that's coming in on WhatsApp. This is Lakshmi Narayana, who's writing in from Vijayawada. He says that, is this the right time to buy Om Power and Transmission? Kunal, is this the right time to enter Om Power and Transmission, the right time to buy this?
Ankita, I'll have to skip this because I do track this one.
Correct. So we'll move on to the next question. This is not under the coverage. So we'll go to Subina, who's writing in from, who's bought 100 shares of SBI at a buying price of 805 rupees. Should she book profit or hold on to SBI? Avinash, I'll come to you for this one because SBI is fundamentally a strong banking name. Should she hold on to it? Do you see more upside? And for how long can she hold on to SBI?
No, I think SBI, she has purchased it at a very good price. I think her entry level has been decent. So I think, continue to hold for the next 6 to 12 months. Our sense is that the banking cycle is now going to turn positive and SBI is likely to show a very strong performance in Q4. Even the next financial year, that is FY27, should be a lot better. So I think, 1250, 1350 could be levels where we could see SBI. So I think, it's better to hold on. This is a stock where I think some further re-rating looks possible. So continue to hold.
Continue to hold. That's a take from Avinash. Let's move on. Let's take Mr. Raghu Raman's question. He's from Chennai. And Sona BLW, he's bought it at 320 and he needs a long-term perspective. Avinash, you would like to go?
Yeah, I think Sona, is a very large vendor to electric vehicle companies. In fact, they cater to the top 20, 25 global electric vehicle players. And I think, this company has always been a front runner in terms of technology, in terms of their positioning in the global market. I think with more and more people going towards renewable and electric vehicles, I think the business is going to rapidly grow. The investor has purchased the stock at a fairly attractive level. So I think, if you can keep in a time frame of say 12 to 15 months, continue to hold. Better prospects seem to be likely in the year going ahead. So FY27 should be a lot better. So continue to hold.
All right. So that's the view coming in on Sona BLW. But now we have a live caller joining us yet again. Parth Anand is joining us from Punjab. Hi, good morning, Parth, and thank you so much for calling us.
Good morning, madam. I have, madam, two query. AGI Green 100 share 699 and 75 share HG Infra at 756.
Okay, so you have AGI Green that you bought at 699. Okay, you're sitting on at a loss there. And AG Infra also you bought it at 755. What's your holding period? Time horizon for this company?
1 year, madam.
Okay. Avinash, I'll come to you. AGI Green, he's sitting at a loss. What should he do? For the next 1 year, he's willing to hold it. But would you advise that in AG Infra also, he's holding at a buying price of 756? What would be your advice to him?
I think, both these companies are fundamentally very strong companies. I think he's purchased these shares at a slightly higher level. But I think, if the investor can slightly increase its time frame from, say, 12 months to roughly about 12 to 18 months, I think definitely the next year is going to be pretty solid and encouraging for both these companies. So my suggestion is rather than booking a loss, keep the faith and continue to hold. If possible, you can average a little and bring down your average cost.
Okay. Mr. Anand, is there anything else you want to ask?
Thank you very much, madam.
Okay, all the best. Let's move on. There's a WhatsApp question coming in from Geeta Anand. She's bought 55 shares of Titagarh at 1207 and she needs a view on that. Kunal, 1207, I think, do you want to give her a short-term target? She's in deep losses.
Yeah, so I think maybe I think it's a good time where you can look to start nibbling in or chipping in or averaging out the stock price back again, because it looks like that maybe the worst could be behind for the stock price in terms of a major price correction. I think from 1800 the stock has corrected or had corrected towards the sub 600 mark. It is a decent correction for Titagarh Wagon in that sense. I think 700, 730 where the stock is right now, you can look to average further at the current juncture so that you can reduce the cost price and hold on to it from a longest term kind of a point of view.
All right, that's the view on Titagarh Rail. But let's take a quick breather before we get going with all the questions that you've been writing into us. Don't stop writing to us because after the break, we're coming back and answering all those questions. Stay tuned. Welcome back. You tuned in to Buy Now, Sell Now show where we get all your stock-specific questions answered. Now let's resume with all the questions that you've been writing into us. Shankar is writing is from Delhi. He says that he's gone overweight on the finance stocks or the financial packs. He's spread across ICICI Bank, HDFC Bank, SBI, Bajaj Finance, Jio Finance and Bank of Maharashtra. Should he trim down? Also, what other sectors can he look at? It's an interesting question. Avinash, I'll come to you. The names that he's mentioned, they're all very strong, counters, whether it's an ICICI or SBI or HDFC or Bajaj Finance. But he wants to know if he should be trimming down on these because he's already overweight on the financial sector. And if yes, then where can he move into?
No, I think clearly, all the names which he has mentioned are doing well. I think both ICICI as well as HDFC Bank reported a good set of numbers. In fact, ICICI Bank numbers appeared better from the private sector bank, segment. Bank of Maharashtra reported its numbers yesterday. I think very strong numbers from this small PSU bank. And SBI numbers are yet expected. So my sense is, I think he should continue to hold, stocks like SBI, Bank of Maharashtra, ICICI Bank. Maybe in HDFC Bank, he could do a little bit of trimming. And if I'm not wrong, I think from the NBFC space, does he have Bajaj Finance, if I'm right?
Bajaj Finance, Jio Finance and Bank of Maharashtra are the names.
Yeah. So I think Jio Finance, I think, is more of a long-term kind of hold. In the short term, we don't expect the stock to move, that significantly. So I would say that, Jio Finance and HDFC, he could trim, but the remaining stocks he should hold on. I think the banking sector is now looking very attractive, and hopefully the first quarter of FY 26-27 is also going to be equally good. I think there's no need for him to, do further diversification because he continues to hold good banking stocks as of now.
Kunal, any specific take from your end?
Yeah, I think it's a good portfolio. I'm not sure what's your overall composition of your portfolio, whether this is the only set of stocks which you have as part of your portfolio. But I think having maybe a slight higher bent or allocation towards financials is not a bad thing. I think, because when you're sticking to quality names and quality stocks within a sector, which is one of the higher weighted sectors on the benchmark indices, you're just trying to be, going with the trend for the benchmark indices. And this is not something which is on an extremely overweighted kind of a note. So I would suggest that, you can hold on to the stocks which you have. And maybe I think if you get a better understanding of your overall context of the portfolios, then we can probably recommend more other sectors for that particular aspect.
All right, Kunal, thank you for weighing in on that. But let's quickly get on board a live caller then. We have Pushkar Saxena who's joining in from Patna. Hi, good morning, Pushkar. Thank you for calling us.
Good morning, madam. I have 4 shares of Hitachi Energy India Limited at the rate 24,185.40. I can hold it for over a period of 3 to 4 years.
Okay.
Please advise me about its future prospects.
Okay. All right. Right, Pushkar. Let me come to you, Avinash. He's holding Hitachi Energy. He's already sitting at a profit. He's bought it at 24,185. He's made his profit, but for the next 3 to 4 years, his time horizon, he's willing to hold on to it. Do you advise holding it for that long, or should he partially book his profits? What should be the strategy?
I think, looking at the kind of quantity, Ankita, he holds, I think it's better that he books out some money because, on a quantity of just 3 to 4 shares, even if the stock appreciates significantly, absolute gains are not going to be very huge. So I think it's better that he books 30-40% of his profit and continues to hold, the rest, for the next at least 18 to 24 months. Company is doing very well. They have a very large order book and the business is very scalable. So I think, unfortunately, he's purchased only 4 shares. So, for him, the absolute returns are not going to be large, but still 50% he could book out and the rest he can hold on.
Okay. Let's move on. Let's take Mali's question. He's from Hyderabad. And Kunal, I'll come to you. Cyient and Cyient DLM at current market price, can one buy? That's his question.
Well, I think so far both these stocks, Cyient as well as Cyient DLM, they've started to show signs of good recovery. I think Cyient recovered from 800, 820 mark to 960. Cyient DLM from 280 to now almost 360 marks. So the recovery has been quite strong for these names. The price correction had also been very steep for these stocks. I think in that context, you can consider buying both of these stocks at current levels.
Okay, Cyient and Cyient DLM both attractive at the current levels. Let's move on to the next question. Sahana is writing from Chennai. Sahana is asking, suggest some cement stocks for the next 2 to 3 years. Avinash, she wants to get into the cement pack. Firstly, let's take a view on the cement pack in general. How does the demand look like? Do we see, cement stocks to now start doing incrementally better?
See, I think normally, post monsoon is a period where you see a better pickup in the cement volume growth. I think, but overall construction activity, government spending on infrastructure has been increasing. So I think, I would believe that in the large cap space, companies like Ambuja Cement, or for that reason, Ultratech, these are players where I think one can safely invest for the next 2 years. Cement is a long-term structural story. So rather than looking at quarter-on-quarter kind of growth numbers, it's always better to play more on the YOY kind of growth. So I think Ultratech and Ambuja Cements could fit the bill. I think these stocks could be acquired in an SIP fashion, and you can stay invested here for the next 2 years.
Kunal, would you want to recommend a buy price in these spaces?
I think current price is good enough for both of these stocks if you're looking to buy. I think what matters over here is that your time frame is long term. So I think in that sense, current prices are good enough.
Okay, so let's move on from the cement pack and let's move on to the next question coming from Satya, who's written. He's sitting at a 40% loss in Som Distilleries and 30% in Shalby Hospitals. Need advice for medium term and 2 alpha prospect recommendations. Okay, let me come to you first, Kunal, on this one. Som Distilleries, he's already sitting at a loss of 40%. What should be his strategy here, and 30% in Shalby Hospitals, and then we'll come to probably the stocks that he can look at.
See, I think Shalby as well as Som Distilleries, both of these stocks are still trending into a steep negative trend for themselves on the downside. Som Distilleries, I think, has fallen from 180 levels, price adjusted, towards 60 mark. And that too, I think it was almost like a consecutive 7-8 months on a trot for the stock on the downside. So I think, of course, that stock still looks to be very weak. But I would believe that maybe just wait for a minor phase of a rally further. If you're looking to exit these stocks for Som Distilleries, I would suggest maybe closer to 9,500 is a good zone where you may consider to exit. For Shalby, you can consider to exit closer to 180, 185 levels, because that would probably be a point where the stocks would meet a major resistance point for themselves.
Okay, so that's the view. But Kunal, would you also recommend something, because he's also asked for recommendations, if any, because he's already sitting at losses, so he probably wants to get the money out and park it somewhere else. Would you recommend a pack where he can invest?
So I think defense is one pack which you can consider investing. You can stick to the better stocks, which is like the likes of HAL and BEL. They're the most stronger, formidable names from the pack. Or you may want to consider the likes of Massgaon Dock, GRC, etc., which could be a slight high beta if you're okay with that. From the other pocket, I think capital market space is something which has been doing very well for themselves. So whether it's Angel One, whether it's MCX, BAC, etc., I think these stocks are also looking quite strong from that pack. And also I think BHEL, something which we've been tracking and recommending over the last many weeks when the stock was especially at sub 300 mark. That stock continues to look very attractive, and it's confirmed a breakout on a slightly higher term time scale. So which means that the medium to long term prospects for BHEL looks quite positive.
Okay, let's move on. Let's take Mr. Rajan's question. He's from Hyderabad, bought 150 shares of LIC Housing at 630 and 200 shares of KNR Constructions at 289. I'm not sure about the time frame, but then let's take a short and a long-term view. Avinash, I'll start with you.
I think LIC Housing Finance, according to me, Kavita, should do well. I think yesterday PNB Housing numbers have come out, and I think Housing Finance seems to be again back in traction. Yesterday, even Bank of Maharashtra mentioned that housing finance is going to be a very large market for them. So my sense is LIC Housing Finance with a parent like LIC should do exceedingly well. So I think he can continue to hold. KNR Construction also sitting on a very large order book, I think, within the EPC and the construction space, and they've been known in their business, to deliver projects ahead of time. So I would say that even KNR, if the investor can hold on for the next 12 to 18 months, I think one could expect a decent risk reward. So both these companies look good from a medium-term perspective.
Right, strong fundamentals, you can look at 12 to 18 months, but then Kunal, short-term targets, if any?
Yeah, I think KNR Construction, I would believe that after this very decent correction for the stock price, you might expect the stock to try and make at least some sort of cover up of this underperformance. From current levels, I would probably expect closer to 138 to 140 as a target for KNR, and once the stock reaches those levels, you may probably want to reach the stock on the higher side. LIC Housing has been doing phenomenally well. I think the recent charts for the stock confirms a breakout on a weekly time scale, would be bullish on the stock. In fact, if you can hold on to it from a long-term perspective, I would look at potentially 750 to even 800 as a target for LIC Housing.
All right. With that, we'll take a quick break. Don't go anywhere. We'll be right back with more questions answered on the other side. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now, and we are answering your stock-specific question. Avinash Korakshkar, Kunal Bothra, our guest on the show, are there live with us answering your stock-specific question. Let's move on. Very interesting question coming in from Mr. Vaman, and he's from Hyderabad, and he wants to invest 1 lakh in Amara Raja, Suzlon, and CESC for 2 years, and for that he needs a buy price and recommendation. But Avinash, for a 2 years time frame, would these stocks would be your pick, or you want to recommend something else to him?
No, I think my sense is Amara Raja definitely can be acquired. I think it's a good auto component play in the battery segment. They are now getting into the electric vehicle lithium battery segment. So I think good growth prospects. And one noteworthy feature about this company is that the balance sheet has been managed very well. They are a debt-free business, and I think along with Exide, they are large players in the OEM as well as the replacement market. So definitely, if the investor has a 2 year plus view, I think he can obviously buy the stock in an SIP fashion. Definitely good long-term prospects over the longer term.
All right, thumbs up on Amara Raja. Kunal, what's going to be your pick, and how should he strategize it?
See, I think Amara Raja, mobility, I think, as a stock which has fallen very sharply from those 2024 highs of 1600 to I think the recent lows of 650, 670 for the stock price. At the current juncture, it's a good price point where you may consider buying the stock. But then remember, I think these are very high beta names. They can rally and they can correct also 20%, 30% in a very short span of time. So a better position size would, I think, be a good strategy to invest into these stocks.
Okay, so that's the strategy to enter Amara Raja. But let's move on to the next question. Guru is writing and he says, can he buy Godrej Agrovet at current price? Kunal, I'll come to you. Godrej Agrovet has seen some movement in the last 1 month or so. It's moved up 11%, but it hasn't really done that well before that. It has been correcting. I mean, it hasn't really done much in the last 6 months, or for that matter, over the last 1 year. Would you firstly recommend getting into Godrej Agrovet? And if yes, is this the right time to enter?
See, I think it's a good stock to have as part of your, say, a tier 2 portfolio, especially on the mid-cap front. The stock seems to be a little bit on the low to moderate beta side, trading at 600, 613 mark currently. I would suggest that if you're considering to buy the stock, then you can keep a near-term target of at least 675, 680 for Godrej Agrovet.
Okay. Next question. This is from Mr. Satya. He is from Visakhapatnam and bought 160 shares of REC at 420 and 3,200 shares of Eternal at 303 and wants to average losses as a long-term investor, and at what price can he average these counters? Kunal, you're going to go with the take?
See, I think for REC, I would suggest rather than averaging REC, it's better that you look at PFC. That's a far more better bet. And especially with the demerger news, we've actually seen PFC outperforming RSC by a good margin. So that's a better bet if you're looking to stay invested into the power financiers. For Eternal, again, I think I had mentioned a buy call on the stock a few weeks back where the stock was at sub 220 levels. Now the stock is almost at 255, 260 mark. It could consolidate over here. I would suggest that if you're looking to average further, you may consider buying the stock in case if there is a correction. And if it corrects back towards, say, 240, 245 kind of a mark.
All right, so that's the view on Eternal. But let's move on to the next question coming in from Coimbatore. Bharatwaj is writing and he says he has 670 shares of Apollo Tyres at a buying price of 503 rupees and he's looking to hold it for the next 2 to 3 years. Can he buy more at the current market price? Again, Kunal, is this the right time to enter Apollo Tyres? He's bought it at 503. He's sitting at a loss right now. Should he average in, and for how long can he hold it?
See, I think there was a phase where Apollo Tyres and JK Tyres were the two strong ones in the tyre pack, which had done very well for themselves. But apparently in the last, I think, maybe 3 months or so, the trends for both of these stocks have been broken. I think I would recommend maybe Apollo Tyres to buy at slightly lower levels, not at current levels of 440, maybe closer to I think 400, 420 could be a better zone if you're looking to average Apollo Tyres.
Okay. Let's move on and let's take other question. This is coming from Vijay. He's from Dubai and 323 shares of HDFC at 904 and he's got approximately 33,000 unrealized loss based on the current market price and wants to know if he can average it further. He's a long-term investor and wants to be in this counter for almost 1 to 2 years. Avinash, what's going to be your recommendation as far as averaging is concerned?
No, I think if he has a 2 year plus time frame, Kavita, he can definitely add to SDFC. I think numbers have been definitely slightly better than what the street expected, but I think we expect a much stronger year in FY27. And hopefully, I think without mentioning that if any further any corporate governance issues don't come up, then I think the stock should be re-rated. It's been beaten down quite badly. And the Q4 numbers have been quite decent. So I think, from a longer term perspective, this is a good bet to, play on the private banking sector, but keep a time frame of 2 years.
Okay, so that's the view on HDFC Bank. Let's move on to Nivendu, who's writing in from Patna. He says that he has LIC shares that he's bought at current levels. He's bought at current level for the last 2 years. He wants to buy it for the next 2 years. The stock is quote income bonus now. What's your view for the next 2 years? Avinash, let me come to you. LIC shares, he's bought at current levels. He wants to hold it for the next 2 years. What is your view for the next 2 years? Can he hold it? He's not written the buying price, but for the next 2 years, what would be your view?
No, I think, see, my sense is that over the next 2 years, the insurance space will definitely grow. And I think if he has already bought in LIC, I think he will get the benefit of bonus, which is 1:1. So I think you need to give in a time frame of at least 2 years here. See, I think unfortunately, the IPO price was above 900 rupees and the stock has underperformed. So I think most probably in the next 2 years, hopefully with the market opportunity, if LIC does grow significantly because Q4 has been very good, if this momentum is maintained in the current year, then I think you could expect a decent compounding of at least 15-20% over the next 2 years. So continue to hold.
Continue to hold. That's the advice from Avinash. Next up is the question from Mr. S.K. Swami. He's from Bhopal and bought MRF 10 quantity at 4200 and he's been holding for the last 20 years and company has not come up with any bonus issue or split, etc. He wants to know what should be his strategy going ahead. Interesting question. And yes, Avinash, would you like to guide him forward as to how can he, hats off to his patience as well.
No, I think Kavita, this stock has been a kind of a very old favorite of many old value investors. I think the main reason why this stock price has gone up is because, the equity base is just about 3 crores. There's hardly any floating stock in the market. I think Kunal, my friend would concur with me that it's very difficult to even trade in this stock because liquidity is very, very tiny. So that's the reason the stock, trades at a very high kind of a price, and the valuations are also quite rich. So my sense is he should continue to hold. If he doesn't require money, I think the company should do well. But my sense is the management is not investor friendly. They don't have any analyst meets. They don't do any conference calls. So bonus issues are, really something which is very difficult to expect from this management. So I think longer term, yes, the company will do well, but shareholders have not benefited.
Kunal, what's going to be your view? How would you like to help Mr. Swami?
Yeah, I'll completely agree with what Avinash said. I think MRF is a case study in itself, frankly, because over the last many decades, the stock has done exceptionally well. So I think hats off to the patience for the viewer who has bought MRF in that aspect. And I don't see any reason why I think you may want to sell the stock at the current juncture, unless you are looking at buying your reshuffling your portfolios or trying to buy the latest themes for the markets or the emerging sectors for the markets as such. Maybe that could be a reason if you want to shift. Then maybe we may want to consider booking some profits. But other than that, I don't see any reason why you should be looking to book MRF.
All right, Kunal, thank you for that view on MRF. Let's move on to the next one. Shakir is writing in from Bahrain. He says he's holding 75 shares of HEG at an average price of 644. What should be the short-term target? Kunal, I'll come to you. He's bought HEG. He's bought it at a buying price of 644. if you can pull up the charts, what would be the short-term target? He's already made a little profit there. How long can he hold it for, and what is the target price that you'll give for HEG?
See, short term will depend on the time frame. I'm assuming that you're looking at this, say, for another 2-3 weeks or so for HEG. If that's the case, then I would suggest that you can keep a target northwards of 700, 725 as a short term. But my strong sense is that the stock is likely, turning around on the long-term charts, on the monthly charts, on the quarterly charts, and that could augur very well for a stock like HEG and its immediate peer graphite on the long-term basis. So if you're a long-term investor, I think the chance of unlocking the much bigger potential trend for HEG and graphite is significantly on the higher side. I would suggest or recommend, if you can possible, shift your time frame to long-term. If not, from a short-term play, 700 to 725 could be a target range which you can keep for HEG.
All right, that's a short and long-term strategy on HEG. But let's move on. Mr. Varda from Hyderabad has bought Yatra, and Avinash, his levels are 162. He's not given us a time frame, but assuming it's a long-term.
I think he should continue to hold. The stock has corrected, but I think if you see the quarter 3 numbers have been pretty solid. I think the company continues to grow quite rapidly. And within the travel and tourism space, it's a well established franchise. So my sense is, keep the conviction and hold on for the next 12 to 15 months. Definitely, I think the stock should get re-rated. Hopefully, once we get to know what is the Q4 number and the commentary for the coming financial year. But definitely, long-term prospects appear to be quite solid.
Okay, so let's move on then to KV Rajan, who's writing in from Hyderabad. He says he's bought 500 shares of Hindustan Foods at 520 rupees. Please advise, there's no holding period that he is given. He's bought it at 520 rupees. He's sitting at a loss right now. Kunal, what should be the strategy?
See, I would recommend an exit if in case the stock comes closer to your cost price. I think just last 2-3 days back, the stock was at 520, 525 kind of a mark. It's a very, very low beta stock. In fact, over the last, I think, 2 years, the stock has just stagnated around this 540, 500 to 650 kind of a range for itself. So very difficult to try and give a trading recommendation over here. I think I would probably prefer the viewer to exit the stock and then shift on to something else.
Okay, let's move on. Thomas George from Cochin, PNP Housing at 480. Avinash?
No, I think he can continue to hold. Yesterday, numbers have come out. In fact, today the company had a conference call in the morning, and I think numbers have been very good. Commentary has also been quite encouraging. So I think he should hold on. I think this is a stock where I think within the housing finance space should be a strong outperformer, and we should see better numbers for the current financial year. So I think he's gotten at the right levels. Continue to hold.
Right, Avinash, thank you for that. PNB Housing, remember, has reported its Q4 numbers, and a good set at that. It is one of the buzzers in the trading session. But with that, it's time for a quick break. Don't go anywhere. After the break, we'll come back and get more questions answered. Stay tuned. Welcome back. You tune in to Buy Now Sell Now show, where we get all your stock-specific questions answered. Let's resume with all the questions that you've been sending to us. This is Lakshmi who's writing in from Mumbai. She says that she holds 60 shares of Adani Ports at a buying price of 1,196 rupees. Should she book her profits at the current price? Kunal, this question is specifically for you. Firstly, she's sitting at a profit right now, at a good profit right now. And what move Adani Ports has given in the last 1 month? 23% up move is what we see. Do you see this up move to continue? She's not given a time horizon, but would you recommend holding on to it or book partial profits and perhaps she can hold on to the rest?
I think you can continue to hold on to the entire quantity. I don't see any reason why you should be looking to book profits over here just because the stock has run up. I think there could be a possibility or a point where the stock can see a much more stronger upside over the long term. I think many of the Adani group of stocks are coming out of a deep corrective phase for themselves, and this could probably be or potentially be a starting point of the major multi-month, multi-year rally also for many of these names. So I would suggest that if you have a long-term time horizon and a slightly higher risk appetite, you can continue to hold on.
All right, you can continue to hold on. Srinivas from Hyderabad wants to know on Kotak Bank, and he bought it at 425. It's for long term, and wants to know for how long can he be invested in it, and at what levels can he book profits. Avinash?
No, I think Kotak Bank is a very good long-term structural opportunity in the private bank space, Kavita. I think the investor has invested a reasonable amount, and I think at the right price. If he can hold on for the next 12 to 18 months, I think better prospects are lined up for FY27. I think clearly within the private bank space, it enjoys very attractive, healthy net interest margins, has got a decent CASA. And I think most importantly, I think they have several subsidiaries which in future could be monetized depending upon the market situation. So I think clearly core banking is going to grow very rapidly, and that is going to benefit Kotak Bank. So my suggestion is hold on. As of now, don't think of booking out. Keep a time frame of at least 12 to 18 months.
All right. That's the view coming in on Kotak Mahindra Bank. But let's move on. Now, this question is specifically for Kunal. Kunal, Sunny is writing and he says, can you help me with Kunal's view on ABFRL? His buying price is 62 rupees. What is the best price to average ABFRL? Kunal, right.
You can continue to hold on to the stock price. I think it's almost at the same price of where you've purchased for ABFRL. This could be a very high beta contra bet. The stock has gone through the last 6 torrid quarters. If I can use that word, because it's corrected from 120 levels to sub 60 mark, where the stock had seen a sharpish correction ending. I think at current levels, you can continue to hold on to the stock price. If you're looking to average further, maybe I think back again closer to that 60-62 could be a good zone where you may want to consider to average out. But I would suggest as of now, just hold on to the existing quantity and see how the stock pans out, because it's very important many times to realize and see that how stocks behave in the best of the market times, or in times when the market suddenly becomes volatile. Those are the kind of behavioral characteristics which tend to outline stocks and help stocks come back and recover quite well from their resistances. So as of now, would suggest to just hold on to ABFRL, and if you're looking to average further, 60-62 could be a good point where you can look to average.
Okay, let's take the next question. This is from Satya. And he wants to know the view on Apollo Microsystem, and is it a good buy for 10 to 12% upside potential in 1 to 3 months? If not, a view on marine electricals for adding in his portfolio. Kunal.
So Apollo Microsystems, yeah, I think you can consider buying the stock at current levels. I think it's done reasonably well for itself. It's recovered quite well from those 185, I think if I'm not wrong, was the low for the stock. It's come back to 288. Buy on dips approach could be a better approach for the stock price at current juncture.
Okay, next question is coming from Ahmedabad. Ritu is writing in. She says, please suggest 2 to 3 stocks each for the short term and for the long term. 2 to 3 years is the time horizon. I'll come to you first, Avinash, for the long term, and then we'll come to Kunal for the short term picks for 2 to 3 odd months. What would be your picks, Avinash?
I think for the next 2 to 3 years, I think stocks like Mahindra and Mahindra and something like a Larsen and Toubro can be accumulated. We could also look at stocks like Indian Hotels. I think this is also a very good structural opportunity. And I think from the smaller stocks, specifically from the PSU banks, Bank of Maharashtra has done very well. So I think Bank of Maharashtra, even at the current levels, for the next 18 to 24 months, looks quite well positioned. Very strong bank with a very strong CASA ratio. So definitely, I think small as well as large cap stocks which I've mentioned can be accumulated slowly. I think you can use an SIP method and gradually accumulate these stocks.
All right, so those were Avinash's pick. Kunal, coming to you, what would be your picks for the next 2 to 3 months?
Yeah, then I would recommend something like Bajaj Finance if we want to consider at current levels of 930 approximately. It's a stock which has a lot of potential, has not performed at par to its potential, but maybe I think over the next few months, you might see the stock coming to a breakout. Trend is something which we've been highlighting earlier, sub 4,000 levels. Still looks currently attractive at the current juncture, 4,300 plus mark, where it's trading right now. JSW Steel from the metal pack is something which I think you can consider buying the stock at the current juncture. It's heading towards a breakout. And maybe one more name which I can add to the kitty would be LIC Housing. We just discussed the stock some time back. I think that stock is also looking quite charged up on the medium to long term time scale. If you can extend your time horizon for LIC Housing to maybe 6 months or more, then I think there is a strong possibility that the stock can outperform.
All right, that's a take coming in on the counter. But with that, it's time up on the viewer query session. Thank you so much, both of you, for taking your time out and helping our viewers today. Thanks. Well, let's move on. The primary market action is subdued since the West Asia war began, with most of the companies seeing a flat to negative listing. The big question now is the sentiment conducive for big IPOs. Our colleague Ashesha joins in with more details. Ashesha.
Primary market action has been subdued ever since the war broke out. In fact, if you look at the number of listings that we have seen since the 28th of February, we've barely seen 8 or 9 listings in the last 1.5 odd months. First up, let's talk about the kind of performance these companies or these new listings have shown immediately after that listing. We had Innovation, which listed at a 10% discount as compared to its issue price. We also have a couple of other counters, the likes of Powerica Limited, which listed at a 8% discount. Central Mine Power Mining, which is Coal India's subsidiary, listed at a 7% discount as compared to its issue price. Of course, we also had a couple of others which listed at a significant premium as compared to their issue price. We have Sidamac at a 14% premium, Om Power at a 6% premium, and Sai Parametrals and GSP Crop Sciences listed at 2 and a 2.5% premium as compared to its issue price. But let's also talk about how they have performed after their listing. So we have considered listing price with the current market price to get a sense of how they've performed after their listing. And we have Amit Chand Jagdish Kumar Exports, which has declined 35% ever since it got listed on the bourses. Innovation trading at a 32% premium. The stock has declined 32% after its listing. On the flip side, we have GSP Crop Sciences, which has ended 29% higher. We have a Central Mine Planning, which is 13% higher as compared to its issue price. So that's how the performance has been. But when we compare the quantum, the number of listings itself has declined in the post-war era, and perhaps that trajectory is likely to continue. But let's also talk about the 3 main reasons which has led to that. One, of course, lower valuations on account of decline in equity market performance that we have seen of late, lesser investor appetite, and uncertain listing gains. These are the primary 3 reasons why we have not seen much action within the primary market in the last 1 month or so. But yes, we have a whole host of big IPOs that are lined up for the rest of this calendar year. Reliance Jio, NSE, SBI Mutual Fund, Flipkart, Zepto, PhonePe. Some of them have already appointed bankers for their listings, which are slated to happen in the middle or in the later part of this calendar year. Geopolitical uncertainty and market instability. These are the 2 factors which continue to remain at play for other primary market listings which are likely to happen for the rest of this calendar year. But there are several important questions which remain at play. The big question now is, West Asia uncertainty, is that likely to weigh heavy on D Street performance going forward, and that will ultimately weigh heavy on the primary market action as well? And the second is the sentiment conducive for big IPOs? These are the big 2 questions now. But for now, investor sentiment has been on the weaker side, and we have not seen many listings of late, but we have many IPOs lined up for the rest of this calendar year.
All right, so that's all the action that's going to take place as far as the primary markets are concerned. But before we wrap up this edition of Buy Now Sell Now, we're leaving you with an exclusive, a mega exclusive for Times Network. Tennis legend Novak Djokovic says that he expects to be in India very soon, saying he feels a personal calling to visit the country. Djokovic also revealed his friendship with Virat Kohli, saying that Virat got him interested in cricket and hinted that the two could share both tennis and cricket when he comes to India. Let's take a look at this.
Joining us is 24-time Grand Slam champion Novak Djokovic. Novak, for the first time ever, the Laureus Awards are being broadcast on Times Now in India. You have a huge, huge fan following in India. What would your message be to all your fans in India?
My message is always love, respect, appreciation for, first of all the support over the years that I personally been receiving from all the Indian tennis fans and India sports fans around the world. There's so many that I've been meeting all this time. And my message would also be, see you very soon in India, because I need to go to India. I've been feeling a calling to come for the last couple of years. So I really hope that I'll be able to come to India and do an event, play a match or whatever it is. I really wish for that, because I feel very close to Indian people.
And you do have a special connect with one Indian athlete. You know who I'm talking about. We've seen the social media exchanges as well. Virat Kohli.
Yes.
So, tell us a little about that as well.
Yes, Virat is a friend and someone I, of course, respect and admire. excuse me, he's actually, to be honest, the reason why I started following cricket. I haven't followed it, so through him I started following it more, and we keep in touch, and hopefully when I come, I don't want to say if, when I come to India, hopefully he can join, and then we could do a little bit of tennis, a little bit of cricket, and have fun, and just spread positive, good vibes with people and celebrate sport.
And Novak, you've been playing so well, 24-time Grand Slam champion, like I said, looking forward to LA 2028 as well.
I am looking forward to it. I think it's a very long way, 2 years for me at this stage of my career in life, but you never know. I'm working, there's no greater honor than representing Serbia, my country, in Olympics, so hopefully I'll be able to do that.
And final question, what do you think about the rivalry then between you, Nadal, and Federer, to now between Carlos, Sinner?
It's different. I think the rivalry between Sinner and Alcaraz is also great, unique in its own way. But for me, let's say the big three always remains the greatest.